Hello, I'm here today with Charles Jillings, Investment Manager from Utilico Emerging Markets Limited. Welcome, Charles.
Morning.
Utilico Emerging Markets suggests investment in emerging market utilities. What sort of companies do you actually invest in, and how do you select those companies?
We're investing in companies that are providing utility services to largely the middle class in big cities. So things like power generation, water services, etc. And in infrastructure. So that would be toll roads, airports, ports, again, largely focused on the middle class in those cities. And communications, and by that we would mean fixed line mobile. But interestingly for us, we've got significant investments in satellites and communications, so mobile masts. And we're looking at, if you want, the growth opportunity that the middle class is generating in those economies. In terms of the areas we invest in, it's a bottom-up process. We follow about 900 companies. I have a team of analysts underneath me, each of which is sector-specific. So they'll know a lot about what the value drivers are, what the opportunities are, what the growth rate should be.
Now, the company's share offers a yield of over 3%. How important are dividends to the management's thinking?
Majority of the companies we invest in are listed. So we have about 2.5% that's unlisted, and it's likely to stay that way. And the reason is very difficult to manage unlisted investments. And again, a feature of the companies we're invested in is they're largely operational. So we tend to shy away from, in my language, 100 acres in Mumbai, try and get planning permission, try and build it out, then run it, then see whether we've got a business. We'd rather invest in a business that's operational. The bottom line of that is they tend to be cash flow generative, they tend to pay a dividend, they have shareholders who are interested in a dividend. So a feature, if you want, is a dividend. Are we driven to achieve a dividend? No, we're driven to achieve a total return, but we're cognizant that there are a lot of high net worth individuals who are investing in Utilico emerging markets who do look to a yield. So we bear it in mind. The board obviously would like to see either a maintained or an increased dividend year on year. And for the last 7 or 8 years, we've achieved that.
Do you think that utilities will share fully in the growth expected from emerging markets?
I think the growth of the middle class is the attractive feature. So if you took Malaysia Airport, that is in our top 10 holdings, last month they announced that the passenger numbers were up 13.3%. If you can achieve that on a top line growth with a high gross margin business, you should see substantial growth at the bottom line. So yes, these are growth companies. And they offer quite a lot of resilience because they're embedded in the local economy.
Do you think, though, that the regulatory and political risks to utilities in these emerging markets are greater than those in developed markets?
Always an interesting question. I would say if you looked at Europe at the moment, a lot of utility companies are under significant pressure in terms of pricing. So there is definitely political pressure on those companies. If you turn to the emerging markets, we try and align ourselves with governments and their objectives. So if you are an investor in mainland China today, you want to be invested in the environmental area would be a fantastic investment. So anything in water, anything in green energy has government support. And that's unlikely to change for the next 5 years. So we're invested in a company called China Gas. China Gas, in its last annual report, reported a top-line growth of 22%, a bottom-line EPS growth of 86%, and 100% increase in dividends. So these are growth companies. Does that company have a risk? In time it might, but at the moment the Chinese government is determined to improve the environment. If I turn the question on its head, if you look at energy and energy supply, especially in Asia, see lots of subsidization. So we tend to shy away from what is a politically sensitive asset.
Now, given the difficult time that emerging markets have had recently, How has the company's investment fared?
If you look at share price performance, we've over the last 12 months, I think we're up 16%, so that's reasonable. Over recent months, yes, we're down. I would say, interestingly, we are much more impacted recently by exchange rates. So the Brazilian real has been weak, Indonesian currency has been weak, and that's impacted on us. If I turn the question on its head, though, the underlying core investments that we have been performing particularly well. So I would say, over time that valuation should show through. Are we able to sidestep the wider market and if you want the ups and downs? No, we're not. Nobody is, and we'll have to hunker down and, if you want, focus on the investments which will make a return over a 5-year horizon.
Well, good luck with that. Charles, thank you very much for joining us today. And if you would like any more information, please do visit the Edison website.